Hello everyone, welcome back. Today we are now starting with the next topic in our chapter 2 of partnership, the basic concepts. The next topic is interest on capital. How do we calculate interest on capital? But you might be wondering why there is a separate topic for this. This is such a simple thing. We have been doing the interest on capital calculation in so many questions that we solved. Okay? But still, there are certain problematic areas in this topic. Let's try and understand this. We know that no interest is allowed on partners' capital unless it is expressly agreed among the partners. We also know that in case there is a partnership deed and there is a mention of provision of interest on capital, yet the rate of interest is not given, then what will happen? The rate will be 6% per annum. But if there is no mention or there is no partnership deed, there won't be any interest on capital. So when the deed specifically provides for it, interest on capital is credited to the partners at an agreed rate with reference to time period for which the capital remain in the business during the financial year. Interest on capital is generally provided for in two situations: when the partner contribute unequal amounts of capital but share profits equally, and where the capital contribution is same but the profit sharing is unequal. So where one situation is capital uneven, profit same, another is capital same, profits uneven. Okay. Now, interest on capital is calculated with due allowance for any addition or withdrawal of capital during the accounting period. For example, Mohini, Rashmi and Naveen entered into a partnership bringing 3 lakh, 2 lakh and rupees 1 lakh respectively into the business. They decided to share profits and losses equally. Okay, see, unequal capital contribution, but they agreed to share profits equally and agreed that interest on capital will be provided to the partners at the rate of 10% per annum. Can they do that? Yes, they have. When they have agreed for 10%, they can absolutely provide 10% per annum. There was no addition or withdrawal of capital by any partner during the year. The interest works out to rupees 30,000. That is 10% on 3 lakh. That is 3 lakh. Yes, 3 lakh. So just make the correction. 10% on 3 lakh. One more zero for Mohini. 20,000. 10% of 2 lakh for Rashmi and 10,000, 10% on 1 lakh for Naveen. Take another case in the same. Mansoor and Reshma were who are partners in a firm, and their capital account showed the balance of rupees 2 lakh and 1 lakh 50,000 respectively, and this balance was on 1st April 2005. Mansoor introduced additional capital of rupees 1 lakh on 1st August. Now see, the original capital of Mansoor, which was 2 lakh, was there in the business right from the beginning. So full April, May, June, July, August, September, October, November, December, January, February and March, all the 12 months, this 2 lakh was there. He bought additional capital of 1 lakh, but this additional capital of 1 lakh was not there for the entire year. He bought this on August 1. So the business could enjoy this 1 lakh only from 1st August. So business will pay interest on this 1 lakh from August 1, not from April 1. On the 2 lakh which Mansoor had right from the beginning, the business will pay for the entire year. But this additional 1 lakh, business will not give for the entire 1 year interest. Why? Because business will say, you gave me this money on 1st August. I could enjoy from August to March. That is the 9 months I could enjoy. I'll pay you interest only for 9 months on this 1 lakh. And Reshma bought in further capital of rupees 1 lakh 50,000 on 1st October. So this 1 lakh 50,000 was enjoyed by the business only for 6 months. Okay, from 1st October to 31st March. So business will give interest on this 1 lakh 50,000 only for 6 months. Business will give interest on this 1 lakh 50, the original 1 lakh 50, which was there on 1st April for the entire year. Interest is to be allowed at 6% per annum on the capital. It should be worked as follows. So see, for Mansoor, this 2 lakh, okay, was there. The original 2 lakh was there for the entire year. So entire year 6% will be given. That comes to 12,000. But this plus this 1 lakh was there only for 8 months. Okay, is it 8 months? He bought it on 30,000. You know, where is it? Yeah, Mansoor introduced additional capital on August 1. So August, September, October, November, December, January, February and March. Yes, 8 months. So 8 months. Okay. If you solve it, it will come to 4,000. So total capital, interest on capital comes to rupees 60,000. For Reshma also, the original capital, okay, as on 1st April was introduced by the firm, was enjoyed by the firm for the entire year. So 1,50,000 multiplied by 6 upon 100 plus on the additional 1,50,000 the firm could enjoy only for 6 months. So 9,000 plus 4,500, the interest on capital will be 13,500. Plus do these plus minus thing. Now, if you have done this, we'll move further. When there are both addition and withdrawal of capital by the partners during the financial year, the interest on capital is calculated as follows. On the opening balance of capital account of partners, interest is calculated for the entire year, whole year. On additional capital bought in by any partner during the year, interest is calculated from the date of introduction of additional capital to the last day of the financial year. And the last one, on the amount of capital withdrawn other than usual drawings during the year, interest for the period from the date of withdrawal to the last day of the financial year is calculated and deducted from the total of the interest calculated under point 1 and 2. Alternatively, it can be calculated with respect to the amounts remained invested for the relevant year. So what we can do by this way, or only for the amount which was there, that we can calculate for that period only. So let's look at illustration 4. In this illustration, we will understand this concept better. Saloni and Shrishti are partners in a firm. Their capital accounts as on April 1, 2005 show the balance of rupees 2 lakh and 3 lakh respectively. On July 1, okay, after 3 months, what happened? Saloni introduced additional capital of rupees 50,000 and Shrishti introduced rupees 60,000. On October 1, Saloni withdrew rupees 30,000 and on January 1, Shrishti withdrew rupees 15,000 from their capital. Interest is allowed at 8% per annum. Calculate interest payable on capital to both the partners during the financial year. Now we can solve it in 2 ways. Okay, we'll see both the ways. Let's see. Statement showing calculation of interest for Saloni. Interest, the opening balance for Saloni was how much? Was 2 lakh. So on this 2 lakh for the full year. So 2 lakh multiply by, this is not this, this is multiply by 8 multiply by 2 lakh. There's nothing. So 2 lakh multiplied by 8 upon 100. Okay. For the entire year, it comes to rupees 16,000. Now the additional 50,000 was bought in on when the additional 50,000 was bought in after 3 months. Okay. On 1st of August. So on this 50,000, only 9-month interest will be given. So 50,000 multiplied by 9 upon 12 multiplied by 8 upon 100. Okay. So 50,000 8% for 9 months only. So that comes to 3,000. Now he withdrew 30,000 on 1st of October. So how much interest will happen on this? So 30,000 multiplied by 8 multiplied by 6. Okay, upon 12 into 100, this 1200 is deducted, is reduced. So total interest comes to 17,800. Another way, simpler way, both are simple in fact, is interest can be calculated on 2 lakh. So for the first 2 lakh, which was opening balance, 2 lakh was till when? Was till 1st of July. Why? Because the additional capital was bought in. So for first 3 months, April, May and June, the capital was 2 lakhs. So on this 2 lakh, the interest on 8%, okay, I'll just show you. On this 2 lakh, interest at the rate of 8%, but only for 3 months. Why? After 3 months, the capital changed and the capital became how much? He bought in 50,000 more. So, the capital became 2,50,000, right? And this capital remained 2,50,000 for how many months? This capital remained 2 lakh for next how many months? For next 3 months. Why 3 months? Because on 1st of October, again the capital changed, okay, capital reduced. So, for 3 months the capital was 2,50,000. So, we will get interest on for 3 months. Then, after what happened? 3 months, 6 months, then 1st of October, and he withdrew 30,000. So, the capital reduced to 2,20,000. And this remained throughout the year till the ending. So, 8% for 6 months. If you solve this, still the answer will be same. Both the method, that for the beginning plus whatever is additional minus whatever you have withdrawn, subtract that. If you don't want to do that, you have another method, that the initial 2 lakh was there only in the firm only for first 3 months. After 3 months, what happened? The capital changed and capital became 2,50,000. This 2,50,000 was in the firm unchanged till 3 months only. So, for 3 months, and then it became 2,20,000, okay, and it remained full year. So, 3 plus 3, 6 plus 6, 12 months, all 12 upon 12, it's done, okay. It's up to you how you want to calculate. In the same way for Shrishti also, the similar thing has happened. Now, treatment of partner's loan to the firm. We have already discussed this, but now let's look at it. The account calls for no special comment except that interest thereon is treated usually like interest on capital and on drawings by the appropriate entries to the current account or interest account on the partners making the advance. Now, Josh and Krish are partners sharing profits and losses in the ratio 3:1. Their capitals at the end of the financial year 2005-06 were 1,50,000 and 75,000. During the year 2005-06, Josh's drawings were rupees 20,000 and Krish's drawings were rupees 5,000, which had been duly debited to, okay, it's already done, debited to partner's capital account. Profit before charging interest on capital was rupees 16,000. The same had also been debited. Okay, this is also done. Krish had bought in additional capital of 16,000 on October 1. Calculate interest on capital. Now, all of you, look, we here generally do remember that interest on capital is always charged generally on opening balance. But here, what is happening here? Their capitals at the end of financial year, the closing capital has been given to you, okay? And what we need to do, we need to find out the opening capital. Why do we need opening capital? Because we need to calculate interest on the opening capital as well. So what we'll do, how do we arrive at closing capital from opening? Just reverse that. Generally, we learned that in opening capital, what we used to do, we used to add whatever further capital the person has introduced and minus the drawings or capital withdrawn. We'll just do the reverse of it. In closing capital, add the withdrawals and reduce the whatever used to increase the capital, reduce that, and additional capital is also reduced. It is just reverse of opening capital plus additional capital plus profit minus drawings equals to closing. It's just the opposite way. From closing, if we want to get opening, we'll just add the drawings and reduce the profits and additional capital. Had it been a loss, we would have added the loss instead of subtracting because we need opening capital. Okay, so all the figures are given. Interest on capital will be rupees 19,200 on this, on 1,60,000 for Josh and for 960 for Krish as calculated. So, the initial 60,000 capital at the beginning, Krish 60,000, 12% plus on 16,000 is the additional capital that was there in the firm for 6 months only equals to 7,960. That's it. Okay. The question is not solved for this. Yeah, it's okay. Sometimes opening capitals of partners may not be given. In such a situation, before calculation of interest on capital, the opening capitals will have to be worked out with the help of partners' closing capitals by marking necessary adjustments for the addition and withdrawal. I just told you, if you have closing capital and if you want to come at opening capital, what you need to do? You need to subtract what? All the profits, all the additional capitals, and you to add back what? All the withdrawals, okay, all the losses. As clarified earlier, the interest on capital is allowed only when the firm has earned profit during the accounting year. Hence, no interest will be allowed during the year the firm has incurred net loss. Okay, very, 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 very important. And if in a year the profit of the firm is less, now, if there are losses, there is no question of providing interest on capital, but there is profit, but the profit is not at par with the interest. That means the profit is there, but less profit is there. The profit of the firm is less than the amount due to partners as interest on capital. The payment of interest will be restricted to the amount of profits. That means the partners will get only that much profit, that much interest, how much the profit they had. In that case, the profit will be effectively distributed in the ratio, of capital. Okay, we will understand this better when we solve the question. A very, very good question. Okay, very interesting question. Just understand this, that Anupam and Abhishek are partners sharing profits and losses in the ratio of 3:2. Simple. Their capital account showed a balance of 1,50,000 and 2 lakh respectively on January 1, 2003. Okay, till now there is no problem. Show the treatment of interest on the capital for the year ending December. So the year from 1st January to December 2006. Okay. It needs to be 2006 or it needs to be 2003. There cannot be. I'll make it 2006. Now, in each of the following alternatives, so we have to solve all the 4 alternatives separately. The first one is, if the partnership deed is silent as to the payment of interest on capital and the profit for the year was 50,000. C, if the profit for the year was 50,000 and there is no partnership deed or the partnership deed is there but it is silent whether to provide interest on capital or not. So we know that we don't have to provide interest on capital. Okay, so this 50,000 will be distributed in their profit sharing ratio of 3:2. So 30,000 to Anupam and 20,000 to Abhishek. Let's look at it. In the absence of specific provision in the deed, no interest will be paid on the capital to the partners. The whole amount of profit will, however, be distributed among the partners in their profit sharing ratio. So we calculated 50,000 will be divided in 3:2. So 30,000 and 20,000. The second one, if partnership deed provides for interest on capital at 8% per annum and the firm incurred a loss of 10,000. So we know, we just read that if there is a loss, again there is no question of giving interest on capital, even if the firm provides that interest on capital is to be provided. Okay, though no, only this loss will be distributed in which ratio? Profit sharing ratio, which is 3:2. So 6,000 and 4,000, this loss will be distributed. So as the firm has incurred losses during the accounting year, no interest on capital will be allowed to any partner. The firm losses will, however, be shared by the partners in their profit sharing ratio. Now the question becomes interesting. The C and D part are really interesting. What happens if partnership deed provides for interest on capital at 6% per annum and the firm earned a profit also of 50,000? Very good. There is a need to provide interest and there is profit also. So let's see how much interest we have to pay. So on 1,50,000, 8% and on 2 lakh, 8%. So here, interest on 2 lakh, 8% on 1,50,000, 8%, total interest is what? 28,000. So if we make a P&L appropriation account, a short P&L appropriation account here, what we'll see? We'll see 50,000 as net profit here, interest on capital total 28,000 here. How much is remaining? I guess 22,000 is remaining. This 22,000 will be distributed in 3:2. Simple. Okay. So that's what is written here. As the profit is sufficient to pay interest at agreed rate, the whole amount of interest on capital shall be allowed and the remaining profit of 22,000 shall be shared by the partners in their profit sharing ratio, which is 3:2. The last one, if the partnership deed provides for interest on capital at 8% per annum and the firm earned a profit of 14,000 only, we just calculated that interest was 28,000 and the firm had profit but less than interest, then what will happen? Then, as the profit for the year is 14,000, which is less than the amount of interest on capital due to partners, that is 28,000, 12,000 for Anupam and 16,000 for Abhishek, interest will be paid, and the available profit of 14,000, Anupam, Abhishek will be credited with 6,000 and 8,000 respectively, effectively on the amount of amounts to sharing the firm's profit in the ratio of interest on capital. Now see, this might be confusing, so I am solving this here. Again, I am making a P&L appropriation account. We know that by net profit, okay, was 14,000 only. We cannot provide 28,000 interest on capital. Okay, so interest on capital will be what? 2 interest on capital. It has to be maximum 14,000. Okay, so that the balance tallies at 14,000. But in what ratio this 14,000 will be distributed? Okay, who are partners? One is Anupam, another one is Abhishek. Anupam and Abhishek. So what we will do? We will distribute this 14,000 in the ratio of their interest on capital. So how much interest on capital they were supposed to get? The same ratio we will use to distribute this 14,000. So 12,000 for Anupam and 16,000 for Abhishek. So 12th, he will get this 14,000 in 12,000 upon 12,000 plus 16,000 in the ratio, and he will get this 14,000 in 16,000 upon 12,000 plus 16,000. So if we solve this, what will happen? 12,000 upon 28,000 and 16,000 upon 28,000. So I am 12 upon 28 and this one is 16 upon 28. So if we can solve this, 14,000 multiplied by 12 upon 28. So 14, 1, 14, 2. Okay, 1,002. 6,000, and for the first one, Anupam and Abhishek, how much? 14,000 multiplied by 16 upon 28. Same 1,000 to 8,000 for Abhishek. The same thing, 6,000, 8,000. Do remember that if the profit is less, the entire profit will be given as interest on capital to the partners. But how much? They will not get in profit sharing ratio. In their interest sharing ratio, okay, they will get the profits. Copy down. Let's test our understanding, and that will be the end of this lecture. Okay, let's see whether we understood this or not. Rani and Suman are in partnership. with capitals of rupees 80,000, rupees 60,000 respectively. During the year 2006-7, Rani withdrew 10,000 from her capital and Suman rupees 15,000. Okay, and this during the year. Profits before charging interest on capital was 50,000. Ravi and Suman shared the profits in the ratio 3:2. Calculate the amount of interest on their capitals at the rate of 12% per annum for the year ended 31st March 2007. So what we just need to do, the closing capitals have been given, we just need to find out the opening capital. Okay, so we'll do this. Closing capital, okay, I'll solve it on the next page, not here. Now, who were the partners? The partners were Rani and Suman. The closing capital is given in the question. 80,000 and 60,000. Ravi withdrew 10,000. Okay. The closing capital it's the opening capital 80,000, 60,000. Then it's very simple. On 80 and 60, you will get the interest. 10,000 for capital and Suman 50,000. Rani, opening capital was 80,000 and Suman 60,000. Okay. During the year, Rani withdrew 10,000 from her capital. She withdrew 15,000. Profit before charging interest on capital was 50,000. Rani and Suman shared profits. Calculate the amount of interest on their capital. So just 12% and of 80 and 12% of 60. We don't know when she withdrew, and the concept of interest on drawings will come next time. That time we'll understand when the withdrawal will come. Priya and Kajal are partners in a firm sharing profits and losses in the ratio of 5:3. The balance in their fixed capital were Priya 6 lakh, Kajal 8 lakh. The profit of the firm for the year ended March 31st was 1,26,000. Calculate their share of profits when there is no agreement in respect of interest on capital and when there is an agreement in respect of interest on capital at 12% per annum. Yes, this we can solve easily. Now, when no agreement on of interest on capital, then how the RP&L appropriation will look like? How much was the profit? 1,26,000. Okay. $1,26,000. Now, interest on capital is to be provided. Let's calculate. Fixed capital were there 6 lakh and 8 lakh. Interest will come to how much? 12% of 6 lakh is 72,000 and 12% of 8 lakh is 96,000. Yes, oh, it surpassed. Very nice. Now, when there is no agreement on interest on capital, there will be no interest on capital. So, entire net profit to net profit transfer to capital account and the to the current account, because it's their fixed capital, to the current account. What is the profit sharing ratio? 5:3. Okay. So Priya, Kajal, 1,26,000 into 5 upon 8 and 1,26,000 into 3 upon 8. If we solve this, how much we get? One lakh 26,000 divided by 8 into 5, 78,750, and 1,26,000 divided by 8 multiplied by 3, 47,250. But the next one is good. This is the A part, this is the B part. In the B part, we need to calculate interest on capital. First for Priya. Okay, how much capital she had? I guess 6 lakh capital she had. Multiply by 12%. So that comes to 72,000 for the entire year. And the next one is Kajal. $8 lakhs. I can see that it is more than 1,26,000 the profit which we have. 72,000 plus 96,000, 1,68,000. Now, we have profit of only 1,26,000. So, obviously, we cannot give 1,68,000. So, what we'll do, we will give this profit of 1,26,000 in the ratio of 72,000 and 96,000. So, here the total profit is 1,26,000, which will be given to her in the ratio of her interest on capital. The total interest on capital is 1,68,000 upon her share. In the same way, Kajal also 1,26,000 in the ratio of her share in the interest on capital. We solve this. Okay, how much do we get? 54,000. And for Kajal, how much do we get? $72,000. So, our profit and loss appropriation for this will look like this is how our P&L appropriation will look like. The important thing is, if the profits are less than the total interest on capital, then the profits will be divided in the ratio how they were supposed to get their interest on capital. Okay, that's how you have to solve. Thank you.